The largest accounting fraud in American history at the time was discovered by 5 internal auditors working on a weekend. The fraud itself was almost embarrassingly simple.
WorldCom was the second largest long-distance telephone company in the United States, assembled by CEO Bernie Ebbers through a series of acquisitions during the telecom boom of the late 1990s. When the dot-com bubble burst and telecom revenues declined, WorldCom faced the prospect of reporting earnings below analyst expectations, something Ebbers considered unacceptable.
The solution was accounting manipulation so basic that it was initially hard to believe was the explanation. Line costs, the fees WorldCom paid to other phone companies to use their networks, were classified as capital expenditures rather than operating expenses. This shifted the costs off the income statement and onto the balance sheet. Between 1999 and 2002, approximately $11 billion in costs were reclassified in this way. The effect on reported earnings was dramatic.
Internal auditor Cynthia Cooper and her small team noticed irregular entries in second quarter 2001 accounts. When they sought supporting documentation for the reclassifications, they received unhelpful responses from the CFO Scott Sullivan's office. They worked nights and weekends accessing systems without informing Sullivan's team. Over several weeks, they traced the complete scope of the manipulation and documented it.
Cooper went directly to WorldCom's audit committee chairman rather than to Sullivan. The audit committee engaged external counsel and a new external auditor. In June 2002, WorldCom announced the restatement. Within weeks, the company filed for bankruptcy, the largest bankruptcy in U.S. history at that point, with approximately $107 billion in assets.
CFO Scott Sullivan pled guilty and received a 5-year sentence reduced for cooperation. CEO Bernie Ebbers was convicted at trial and sentenced to 25 years. He served about 13 years before his release due to deteriorating health. Arthur Anderson, already under indictment for the Enron shredding, had also been WorldCom's auditor, though its role was limited in the final period.
The WorldCom documents showed that accounting fraud can be so simple that it hides in plain sight. The journal entries that reclassified billions of dollars in costs were not hidden in complex derivative structures or offshore vehicles. They were in the general ledger executed by accountants following instructions. The complexity wasn't in the fraud, it was in why it took so long to look. Cynthia Cooper, as Time Magazine's Person of the Year for 2002, called it a failure of checks and balances. Subscribe for more cases.